Hello traders, this is Blake Morrow with ForexAnalytix, and you are listening to the week ahead video for September 1st, 2019. Yes, I'm excited about September. You know, it's not because August was a bad trading month. It's just I'm so sick of summer. I live in Phoenix, Arizona area, and it's hot, and I'm over it. If you guys are in the desert or maybe in Dubai or something, you know how I feel. It's just, I'm ready for cooler weather. So that's why I'm so excited about September 1st or the beginning of September, but also because it's the beginning of what I like to call the trading season. It's kind of like where everything just starts, right the first week, first 2 weeks of September, things start to get active, and that's exciting. So I got to say, if you haven't tried out ForexAnalytix, make sure you do so. Or if you want to do so, do it for $1 for 10 days. However, I'm gonna tell you guys that we do have a special coming. Not yet, but a special. So if you want to wait for a great price, then you're going to have to wait for the next couple weeks. But in the meantime, you can try out ForexAnalytix. It's $1 for 10 days. Just $1. And once you do that, make sure to download the mobile app. The mobile app's great because it will provide you with notifications and updates on the fly. Every time we do analysis, you'll get that piece of analysis on your mobile phone. When support and resistance levels are breached that we've identified, you're notified. If we have to send out an alert because something's really moving, you're going to get it, and that's always really nice. So make sure you download the mobile app at the iTunes Store or the Google Play Store, or whatever platform that you're using, whatever type of phone you're using. Okay, let's talk about this week. So first of all, it is a holiday week in the U.S., so we will not be broadcasting our normal face webinar on Monday. That's because it is a holiday, but that doesn't mean that there isn't anything happening on Monday. We're coming off of a weekend where tariffs are being increased, and it seems like we still have a showdown between the U.S. and China. So there's a increase in our tariffs, then there's a retaliatory. Geez, I can't even say it. You have to excuse me. It is Sunday morning here. Tariffs by China. So we might have a little bit of risk off when the market opens, but more importantly, we have Australia retail sales and RBA decision coming up first thing. Well, actually, it's first thing Tuesday morning in Australia, but it's going to be Monday night for those of us in North America. And you can see like the Aussie is in this nice little triangle formation. You see this little triangle formation. Since we're in a downtrend, it is basically a pennant, but that doesn't mean that we can't move higher. With the central banks that are meeting this week, we have the RBA, we have the Bank of Canada, and midweek we also have the Riksbank. For those of you that follow the U.S. dollar, Swedish krona, and I'll tell you what, this thing has been ripping. I mean, I want to say it's all-time highs based on the information I have on these charts, but I believe it's like 17 or 18-year highs, going further back, more data than I have here. But and by the way, just so you know, all those central banks, the Bank of Canada, the RBA, and the Riksbank, are expected to keep rates unchanged, but most economists are expecting them to start paving the way for rate cuts moving forward. So we would be expecting more dovish commentary. The interesting thing about, like, if you look at the US dollar Swedish krona, for those of you that follow it, we have hit, check this out, 161% extension of this last move lower, or you can call it a consolidation. It's barely a move lower. 161% extension. Also, 127% extension of basically the summer high to low. I mean, that was May highs to June lows. So that summer range, we're at 127% extension and a very divergent relative strength. I mean, if you look at the RSI, as we hit highs in price, relative strength is going down. So it's divergent, suggesting that this move higher is happening on less strength. But that doesn't mean that we can't go higher and relative strength break out. It doesn't mean this can't happen. I'm just saying that it's that it's divergent for now. So if we stop here and we reverse, that probably would signal that that we're going to see a reversal. Now, the only reason why I bring that specifically up, it's because if you look at the dollar index, we basically hit these recent highs at 99, and we backed off. That was on Friday. A lot of the dollar index or the dollar move was due to the end of month flows, and you also have to keep in mind there's not a lot of traders at their desks. So when you have lack of liquidity and you have flows that are strong, in this case dollar buying, there's less people to stand in the way. So the dollar in this example, tended to stretch a little further till the midday Friday or end of Europe, and then we finally peaked out and rolled over. But the fact of the matter is the dollar index is up against some pretty key resistance here. So if the dollar index reverses a little bit, that could bring the US dollar Swedish krona down, especially if the Riksbank's a little more, let's just say, less dovish than the market expects. And that's the same for all the central banks too. I mean, like with the RBA, everybody's expecting the RBA is going to be dovish and very dovish and really set the pace for future cuts. But how about if they are not? I expect them to be too, but how about if they're not? I mean, a move back above 68 cents would be quite bullish for the Aussie, right? I mean, that was the breakdown point over here, and if we broke back over here, I wouldn't want to be short, because I try to, even though I don't have an Aussie US dollar position, I try to think about how I would feel if I was short or long. So if I was short the Aussie, like let's say I was lucky enough to establish a core position at 70 cents, and I've been writing it down for the last 3-4 weeks. I would probably be like, okay, well, if it gets back above 68 cents, I don't want to be short anymore. So that's how I think about the Aussie where we're at, because if the RBA is just a little less dovish, could we reverse, or could China and the US both throw up their hands and say enough is enough, let's talk, let's have a concrete meeting. Then the Aussie would reciprocate in a very bullish move. So, those are just things that you have to think about as you're navigating through next week's worth of data, if you will. All right, a couple other things that I think are really important. If you look at the euro dollar, let's take a quick look at the euro. The euro pushed through 110. We closed below 110, and this is the daily chart of the euro. Now, Steve from our team, he drew out the euro how I had previously had my descending wedge drawn out. You see the low right here, lows. We kind of left that wick out, and then we broke. We closed below it when we closed below the 110.20 level or whatever, 110.30. Anyway, it looks bearish, right? But let me give you a different view, just for to give you food for thought here. Let's look at the euro dollar this way. All right, now if you look back at the charts that Steve had, he was looking like I had it like this too, and I'm referencing Steve because he did the analysis on the euro over the weekend, which he's very good. I'm just giving you obviously he's my team member, so I'm going to tell you that, but I'm going to also give you an alternate view, because if we have that previous trend line, which I did have drawn, how about if we drew from the lows in 2017, we connect the low here from 2018, and then where we're currently at, and we have those spike lows right here, August of 2018. Well, that means that this extension, this one right here, right, 127% extension that we're testing at 109.60, I think we have a lot of support here at 109.50. So therefore, I think if you are short the euro dollar, you have to be a little careful. you've heard me say this a lot, and if you listen to the presentation that I did with Pepperstone Securities and Boris Schlossberg from BK Asset Management a couple weeks back, and a couple other folks that were in that panel, Trader Fest. All right, I talked about, and I continue to talk about, the euro is a funding currency, and it has been for a while. So when stocks are higher, people want to sell euros, buy other things, including dollars. Well, if stocks start to come down, which we're gonna see how the market takes this trade news after this weekend, and going into this fall. If stocks start to fall, then will we get an unwind of euro shorts? That I think is a big risk to the market. I think a big risk is that the euro dollar unwinds these short positions and you see a bounce in the euro. Could it be a full on reversal? Well, I mean, that depends on a lot of things. It depends on probably political changes in Italy and Germany moving forward, and if German growth stabilizes from this contractionary data that we're getting. There's a lot of things that would contribute to a euro reversal, but there are things that trigger the initial move. And in this case, what I'm explaining to you is, if there is a short covering reversal in the euro because of carry trade liquidation, where you see a reversal of the strong carry trade, which has been short euros by dollars in this case. You see a reversal of that. If stocks come down, that could kickstart a move. And like I said, it's hard for me to go, oh yeah, well, this is the bottom of the euro, and we're going to 118 now. No. I'm not saying that. There would have to be so much that would have to transpire in order for a move like that to develop. But what I am saying is that if this is a descending wedge, which I think it is, and I think we've been forming this for a long time, is that could we go from 109 back up to 112, and then maybe like this, and eventually break out, depending on like I said, a multitude of other things, which would not be because the euro is such a great currency or the dollar is such a bad currency. I think that if we find lows or highs, maybe if you're talking about the dollar index, they're formed for a specific reason or because of a certain event, but then the compounding events following it could be what sets in motion a bigger reversal. And that, since I don't have that data and I can't see that in front of me, it's hard for me to make that judgment call. But I could see why we could bottom if stocks reversed, right? If stocks reversed, I could see the reason why the euro would reverse. And then again, what happens from here, it probably has more to do with other parts of the chain of events versus that one specific thing that created the reversal in the first place. So just things I want to talk about. Now, a couple other things that I want to mention is we're inching closer to Brexit, October 31st. Like I said before, I don't know if I told you guys or the people or the traders during the FACE webinar. Look, October 31st is Halloween for us here in the United States. We go trick-or-treating, and I might send my wife off with the kids on their own. I might be in front of my computer because, when the clock strikes midnight and Brexit does or does not happen at that point, we got to be prepared for some volatility. Now, in order for me to get bullish the cable, same rules apply that had applied last week. I wasn't going to get bullish until we got above 123. Well, we're not above 123. We're lower. In this case, I wouldn't even consider being bullish the cable until we were back above 122.50. Are there things that could happen between now and next Friday that could trigger a move above 122? Yeah, I mean, how about if Parliament tries to, push through the means to stop, Boris Johnson from having a no deal Brexit? How about if there's a vote of no confidence? I mean, there are things that could happen that could spur that type of move, but technically, there's no reason to be bullish the pound dollar while we're above, or excuse me, while we're below 122.50. There just isn't, technically. But I can see the argument for people to say, well, maybe we are bottoming. I mean, look, we're not at all time, or 52-week or post Brexit lows. We're not. We're still holding above those levels. A drop below 120 probably puts new lows in jeopardy, but for now we're holding, and it would be a technically pretty magnificent. I'm just saying this, out loud, that if we created a low here for whatever reason, let's say that there's no means for Boris Johnson to push through a Brexit without a deal. Let's just say that happens. However that happens, you guys in the UK would know better than me. But let's just say that happens. Well, the pound would break above 123, 122.50. We'd probably break above 123.20, 123.75, and then you would have everybody saying, "Wow, look, my gosh, there's a big double bottom," or you can say there's higher lows. So it's close to a double bottom. I'm getting long, and then that there's technical significance of a reversal here in the cable if it does happen, which, in my opinion, I would turn probably pretty bullish at that point. But like I said, I'm just more daydreaming than anything. I'm not saying that is going to happen. The proof has to be shown to me technically, versus me just assuming something's going to happen, because I don't know, and it's okay. It's okay not to know. I mean, UK politics is about as foreign as brain surgery is to me. So, I don't know personally what is going to happen, and it's so confusing. I let the market tell me what's going to happen, and I know technically if we get above 123, it's bullish. We get above 123.75, it's really bullish, and then we start looking at a double bottom, and then hopefully everything else falls into place that allows for a continued rally in the cable moving forward. And by the way, if you didn't know, I was a brain surgeon assistant, and I'm joking. I really wasn't. I'm totally kidding. It's Sunday fun day, right? All right, a couple other things that we should note. With the Canadian, the dollar Canadian is at risk. I know we've been consolidating here, and I've been telling you guys for like weeks. I have no idea what to do with it, but I do know this. There's one thing I do know. In the event that the Bank of Canada just is really dovish, or let's say I don't think that they're going to cut right now. I think there's less than a 20% chance. I have to go back and look at Bloomberg and look at the data that we have on that. But I know it's not like significant. But let's say the market starts looking at the Bank of Canada as being very dovish, or maybe they cut rates unexpectedly, or it looks like they're going to cut rates more aggressively moving forward. The dollar Canadian, if we break above this right here, like you call it 133.50, because it's like this minor trend line. You can see it right through here, minor trend line, but really 133.50. We break through that. Then if we break through 134 and change, then it turns really bullish. You know what I mean? And I wouldn't want to be short the U.S. dollar Canadian if that happened. I'm saying that out loud. I know a lot of folks have been bullish the Canadian dollar, expecting us to roll over, and frankly, I'm surprised with the bounce and risk that the dollar Canadian is not lower. I know just based on risk appetite, some of the data that's come out, it's like, why isn't the dollar Canadian lower? Well, if it's not lower and everybody's short, and it's not breaking down, you might eventually get a squeeze higher as everybody who's short's frustrated. Short dollar CAD, long Canadian dollars, they get frustrated, and then they have to reverse their position. Like I said, we get above 134 and change, It could be very, very bullish. Dollar Mexican peso threatening a big, 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 big pennant breakout. We probed above 2020, but yeah, a move above 2025 or 2020 on a closing basis, extremely bullish. The Kiwi, one last thing I want to mention about the Kiwi. So the Kiwi stopped at a couple big fib levels. So check this out real quick, and then I'm gonna let you guys go. Whoops, not that. That's not what I wanted. I'll get rid of that. I don't even need it. Okay, so see this? That move? 161% extension. You see it? Right there. Okay, let's zoom in a little bit. This move right here, you have to go on a 4-hour to see it better. The last bounce, 161% extension. That's called a confluence. Now, you notice that blue 127% extension below there? That, my friends, is from this move here, low of October 2018, the high of December 2018, 127% extension. So big confluence of support down here. Now, I actually played it to alongside on Friday and took a few pips out of it because I knew it was there, but it's not bullish yet, and it's not signaling that there's a reversal yet. However, I'll tell you what, if we like break above this, 63, I guess we can call it like 63.60, 63.70, somewhere around there. We break above that, I'm going to be bullish, and it's hard for me to foresee the reason why I want to be bullish the Kiwi. Like, I don't have any concrete macro evidence like I need to be bullish the Kiwi right now. There is nothing, but that doesn't mean a move can't develop and it develop. It's quite possible. So something I think you should pay attention to. Oh, I guess I should probably mention really quick on the Aussie. Oh, we talked about the Aussie. Never mind. We have the RBA coming, and then the dollar yen is just kind of locked in this very choppy downward channel. Okay, but guys, I want to mention this. If you haven't tried out ForexAnalytix, do so. Just try it. It's $1 for 10 days. In the next couple weeks, we're going to have a very big special. It's an end of or beginning of season special, and we are also going to be launching something very good for those of you that are on more of a budget, and that's really exciting as well. So I'll save that for the live webinars, and I'll leave the rest of you guys hanging for a couple weeks until we can give you the full-on information on that. But guys, there's so many tools in here. There's so much cool stuff. There's there's so many things that you can do with this platform, and you have the alerts, and you have all the analysis, and it's just it's really quite customizable, and I think you're going to really enjoy it. So my name is Blake Morrow. I'm with ForexAnalytix, and if you guys have enjoyed this video and you think it's going to be beneficial to you next week, make sure you give us a thumbs up on the YouTube video, and thanks everybody for tuning in. Hope you guys have a great remainder of your long weekend. I'll see you on Tuesday. Have a good one.